This video is going to be a completely crazy one because apparently the Chinese economy is on the edge of collapsing in just a matter of days. And it might even in fact be collapsing as you are watching this video. The Chinese government, they recently just approved a $44 billion bailout, and that is indicating that they are bracing for impact and that they are trying to limit the impact as much as possible. The true consequences for the rest of the world is yet unknown.
This is the story of a huge change in the Chinese economy.
A story about hubris, about excess, but above anything else is a story about debts.
Eye-watering amounts of leverage.
The rapid expansion of China's property sector on cheap credit.
The meteoric rise of a company founded by one man who ultimately thought that he could do anything as long as he borrowed enough money.
In today's video, I'm going to be talking about why the Chinese economy is collapsing and the true consequences of what is happening. And to be completely honest, then I had no idea how bad the situation in China was until a couple of days ago. Right now you might be thinking, why does this matter to me as I don't live in China? But China is the second largest economy in the world and they are fighting to become larger than the US. And in 2020, 19.6% of the total import in the US was from China. So we are extremely dependent on China in our everyday life, and right now they are on the edge of a complete financial collapse. It all started within the real estate market, which has been accused of running a Ponzi scheme of more than $9.2 trillion. And this makes the entire crypto space look extremely small in comparison. Last year we had the Chinese real estate company Evergrande defaulting on the debt, and this was the first official sign of what is actually going on. However, no one had any idea about the magnitude of the whole situation, or the fact that this could be the thing that sends China into the next Great Depression in a very short amount of time. Recently it came to the surface that a large proportion of the entire real estate market in China is built upon a Ponzi scheme. So here is how this scam works. A real estate company comes along and takes funding and pre-sale money to start building homes. But before they actually start building these homes, well then they basically use the money that they got to actually go out there and collect more funding and more pre-sale money. And this basically goes on and on without them actually start building any of these homes. And this makes these companies extremely leveraged. It might sound very strange that the Chinese people are basically pre-buying houses that are not even built yet. However, this is very normal in China, and more than 85% of all houses sold in China are pre-bought, which means that they are bought before the building is even there. And it can take years for these real estate developers to even start building these homes. And that is exactly why you see so many half-empty large apartment buildings all over China. The homebuyers and the investors in China are of course not happy about the situation right now. And the demand for housing has dropped to 16.9%, which is the lowest level since 2016. And home sales have plummeted 25%. So to explain how all of this has happened, well then we need to look at the real estate market in China that has been in a bubble for the last couple of years, as investors are using this market as a safety net, causing the real estate market to increase by double digits year over year. On top of all of that, China has experienced a major urbanization and a really high societal pressure to actually own a house, and that has caused a massive relocation to cities offering greater opportunities, higher wages, and that has of course driven demand up even further. China is actually building 5 times as many houses as the US and Europe combined. This rapid expansion of the real estate market in China has caused more than 70% of their wealth to be tied up to real estate. And real estate is also currently accounting for more than 30% of the total GDP in China. That is more than twice as high as it is in the States. The rapid expansion of the real estate market in China and the fact that people are willing to pre-buy their homes made the demand explode and thereby also make the prices increase. The price to income ratio is around 23 right now. That actually means that if we have a person who's earning $50,000 per year, well then can this one person go to the bank and ask for a loan of $1,150,000 to buy a home, and that is completely insane to think about. In the US, this same person would probably not be able to get a loan of more than $250,000. The tension between China and the US is extremely high right now, because what happens in China will also affect the US, especially the US stock market. And right now the US is actually trying to audit some of these companies in order to find out how bad the situation actually is. But mainland China and Hong Kong are the only two jurisdictions in the world that doesn't allow for worldwide inspections. And due to these audits, well, then there are already 5 major Chinese companies that voluntarily has taken themselves off the US stock exchanges. Right now there is roughly 300 companies at risk of being delisted that combined is worth more than $2.4 trillion. And this does also include giants like Alibaba. So it does seem like the US is starting to prepare for what might come. So what is China actually doing about it? Well, they have started to tighten the regulations and supervising the customer funds and making sure of timely delivery of new houses. But the fact that 90% of the population is exposed to the real estate market, and the fact that 13 million units were halted from last year will have its consequences also on other industries, especially the banking industry that does have a lot of money tied up in the real estate market. And many people in China have in fact already had their assets frozen in the bank since April last year, with the explanation that the government is examining allegations of fraud. The biggest question now is, how bad will this situation get, and how will all of this affect us as investors? And the real answer to this question is that no one knows yet, because a lot of the data about this whole situation is being kept very closely within the Chinese government. So therefore it is extremely hard to say how bad the situation actually is. And a lot of this has to do with them trying to figure this whole situation out on their own. And they have already approved a $44 billion bailout that should help all of the real estate developers finishing their unfinished properties. The bailout is basically indicating just how bad the situation actually is. But the bailout could also be an indication that the collapse of the Chinese economy has already started. But the true consequences of this are yet unknown to the rest of the world. Right now there is a lot of things going on, and it is a very interesting time to be an investor. But for me personally, I'm basically going to be doing what I've always been doing, which is basically buying broad index funds like the VTI and the VOO, and a few individual stocks as well. I hope you liked the video. If you did, then please press the like button below the video, and make sure to subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.